to talk you through a 1-minute scalp trading strategy, which I trade on the US30 and on Nasdaq during the New York session. It uses two confirmations, so it uses one on the 1-minute chart and one on the 5-minute chart. I have made a video on this previously, but since I made that video, I've been trading this most days, and there's been a few nuances and adjustments and also just a few little bits to add since the last video that I made on this. So if you're excited to learn, hit the thumbs up button before we get started, and if you want to see more content like this, then make sure to subscribe to Trading Angel now as well. If you're new to this channel, then welcome to Trading Angel. My name's Caroline. I am an indices trader. I trade the Dow Jones and the Nasdaq in the New York session. I've been trading for about 10 years and I've been coaching traders for about 5 years. So this is a strategy which is very popular. People enjoy it because it's fairly straightforward to learn. However, having said that, it is one of my core beliefs that you should never, ever, ever go straight to live trading the second you hear a new strategy. Any new strategy you hear should only ever be practiced on a demo account or on a simulator using virtual money. And that's just because even though you understand the strategy rules and how it works, you're not going to perfect it or make money from it or be good at it until you've put in the practice hours. So this is just me telling you the strategy rules, how I trade this, but please, please, please never trade this live unless you have got consistent results on a simulator or on a demo account first, because sometimes strategies seem very straightforward when you explain them on a video, but then obviously when you start to live trade them or you practice yourself, there are little nuances that come up. Also, the chart looks slightly different every day. So although the rules are obviously the same each time, it looks slightly different every single day. And obviously you need to get used to that. And the best way to do that is using virtual money. So risk warning over. Now let's move forward with the strategy. So I'm going to be showing an example on the US 30. There are a couple versions to the strategy. You can get a little bit more advanced and a little bit more aggressive with it because there is a way to get in much earlier. You can see on this example that I've got up here, this is the point to get in. This is very unaggressive. The aggressive place to get in would be down here. So that's using key levels and then looking at the price action on the key level. This one is a little bit slower. So obviously if you're going aggressive, then what happens is you take more trades and you get more stop losses hit, and you obviously have to be quite experienced as a trader to be able to deal with that emotionally. If you go for the slightly less aggressive version, you are taking less trades, you're having less stop losses hit, but also your risk to reward is slightly different. So you'll have to take on a little bit more risk and you'll have slightly lower reward. Obviously, if you took a trade down here, it would look a little bit like, let's just give you an example. It would look a little bit like that. So obviously you can get a better risk to reward. Sorry, I moved that around, didn't mean to do that. You can get a better risk to reward if that's what I meant to do. You can get a better risk to reward if you go more aggressive. But as I say, that stop loss is getting hit more trades, more stop losses hit. And it's also being very focused on the detail, and it takes a little bit longer to master that. So we're going to go less aggressive for the first tutorial on this. And obviously I'm happy to make more videos on this if you want to see the slight nuances when you move it closer to the key levels. But as we're not going to use the key levels in this video, I'm just going to take them off for now. And I have a nice clean chart. So what we want to do on this strategy, effectively, it is a reversal. So it's once the market has made a move in the opposite direction, you're then looking for a setup for when it moves in the other direction. So as you can see here, obviously it made a move down on the open, on the New York Open, and then it made a move up. So this is really common for the US 30 and Nasdaq as well. They do like to move in both directions during the New York session. Sometimes you'll get two big moves up, sometimes you'll get a move down and a move up, or a move up and a move down. So it kind of changes, but ultimately in the New York session, you do tend to get around two big tradable moves that you can get something out of. And this is mainly looking for that second one. The first one tends to happen directly off the back of the open, and I'm looking for very different things when I'm looking for a move sort of after 2:30. That's UK time. So New York opens 2:30 UK time, which is where I am. And then after around 3 o'clock, there's more options for this strategy, which looks for a reversal. So once that first move has happened. I will say that often the second move can be shorter than the first move if it's in the opposite direction. So can you see here, we had a really long move down here, and then the move back up was around half the length of it. That's very normal. So you definitely don't want to be too ambitious and aiming too much for a huge move. The second one, you need to understand that it is likely to be a little bit smaller than the first one. I'm looking for two things on the 1 minute chart and on the 5 minute chart. Effectively, we're looking for that first move to have happened and then to slow down and to change direction. So often it does actually hit a key level, as you saw. I'm not going to go into the key levels in this video because that's a whole different video, and I could talk about key levels forever and ever. And then ultimately, when you're looking at the key levels, you're looking for price action off them. But what we're looking for in this one is something a little bit different. It's nice and slow in that sense. When you're looking on the key levels, you're having to act really fast, and it's very fast paced, and you have to make decisions very quickly. And as I say, that means you're taking more trades and more stop losses are getting hit. So it is a little bit more intense. There's something quite nice about this one because it's quite slow. You kind of get that slowdown and momentum from the other side, and you can tell that perhaps there's a possible trade on its way, and you can take your time to get into it. So you have these two confirmations, which, you know, doesn't matter which one happens first or which one happens second, you're entering on the second one. So the first thing that we're going to do is we're actually going to go to the 5 minute chart. I'm looking for a setup on the 1 minute, but I'm just going to go to the 5 minute first. So we're looking on Heikin Ashi on the 5 minute chart. If you are familiar with this channel, then you'll know that I love Heikin Ashi. I use it as a momentum tool. So I use it to help me gauge whether the market has momentum, is changing momentum, or momentum slowing down. So these green candlesticks with the flat base and the wick at the top, these show bullish momentum. These red candlesticks with a flat top and wick at the base, they show bearish momentum. And when the candles have wick either side, or both sides, sorry, they can be either red or green. They show indecisive momentum. So often what happens is when the market's in a strong trend, you'll see momentum just in one direction. As it slows down to change direction, you'll start to see indecisive candles. These show that the market is slowing down. And then as it's picking up momentum in the other direction, you'll start to see momentum candles in the other direction. Sometimes you get momentum candles when the market's just having a pause and then it continues on. So you definitely don't want to be too trigger happy every time you see a slowdown in momentum, because it could just be a pullback. You want to actually wait for momentum to change direction. So what you want to do on the 5 minute chart is you want to wait for a candle of the opposite color to show that momentum has actually changed and it's not just a little pullback. So you can see here we've got a couple candles which show the indecisive momentum, and then this candle here is the first one where you can see that momentum has actually changed to the other side. So this candle opened at 325, which means it closed at 330. So that means that I couldn't possibly look for a trade setup before 3:30, because up to that point the candle was still forming and we still only had indecisive momentum. So that's what we're looking for over here. We're waiting for momentum to actually change direction. Now let's go back to the 1 minute chart. And the second thing that I'm looking for is I'm looking for a little bit of price action. What I want to look for is the indecisive cluster that's been formed when the market has slowed down. So we have this really dramatic pullback here. Can you see that? Really dramatic move up here. That's quite a good sign if you are looking for a reversal. Dramatic pullbacks often show that perhaps the market has stopped moving in the direction it's going and there's pressure on the other side. You don't want to get in straight away, or if you do, understand that that's incredibly aggressive and you're likely to have your stop loss getting hit. That's kind of the risk with being aggressive is you do get more stop losses hit, and you obviously have to make sure you're using a very tight stop loss in order to cope with that. Or you're also very resilient as a trader, because a lot of traders don't like having their stop loss hit very often. It can send them on tilt. You want to sort of wait for this cluster of indecision to finish forming, and then you want to see where the highest point of it is. So the highest point is this point here. So we're looking at the wick of this point, and then we need to see it being broken by a long body candle. So I can see that this candle here poked above it. I wouldn't consider that to be a long body candle breaking it. To me, that's playing a little bit close. This one, I would consider that. There, the body of the candle has clearly broken way above the highest point of the range that got formed at the bottom there. However, this one is still too early because we still haven't had momentum change on the 5-minute chart until this candle here. There we go, that one at 3:30. So if you entered in at 3:30 at this point, then you can grab, I usually aim for around 100. Oh, that did not work. I usually aim for around 120 points on these trades. So around that, you can get a trade there. That went on for roughly 45 minutes. So they are quite quick, which is quite nice because you do get quite quick feedback. Often if you've got it wrong, obviously that happens all of the time. You can get it wrong. Sometimes it's just having a really dramatic pullback and actually is still carrying on down, especially if there is a lot of news out or if it's quite news heavy day. You might see these dramatic pullbacks and it might look like an entry, but then it will carry on falling. But you do tend to figure out quite quickly if you're in a good trade or a bad trade, which is what I quite like about scalp trading. So even if you get it wrong, your stop loss gets hit pretty quickly and the pain is over very quickly. And also on the other hand, if it's right, you do tend to figure out quite quickly. You kind of get that margin because it moves quite quickly. So it almost moves straight into profit if you have got it right, and then you kind of have that margin of safety, so you feel a little bit better. You can always move your stop loss to break even if you want to close off any risk. It depends how risk averse you are. You will sometimes be very disappointed when you do that because it might come back and hit your stop loss at break even and then carry on going anyway. That happens all of the time, but my philosophy is a break even trade doesn't matter. If you have a go and you close off risk and it gets hit, it doesn't matter, you've not lost anything. But if you've been trading for a while, you'll know that losses happen so often. So actually it's better sometimes just to have a break even and have no risk left open than to just keep opening risk all of the time. Ultimately, it's up to the individual trader how risk averse they are. So on these ones, I would always have a stop loss of around 30 points. That means this has a risk reward ratio of 1:4, and your stop loss will get hit around 50% of the time. So you do have to be very resilient, but for the times that take profit gets hit, obviously that 120 that you make overrides the 30. So it is quite nice. You definitely don't want to take more than 2 attempts to get in, because often if I've taken 2 stop losses on this strategy, it usually means that I've actually got the direction wrong and it might be going the other way instead. Often there's some news that's coming out that perhaps I've missed or I didn't know about. Sometimes there are meetings going on that we don't actually know about and we don't get told about until after they've happened. So if my stop loss gets hit twice, that's just my sign to say, okay, maybe there's something going on that I don't know about. Maybe I've got the direction wrong. There are also days when there isn't even 2 big moves. So you might just get 1 big move and then it's just chaos and cluster for the whole rest of the session. So you definitely don't want to get stuck in one of those. You're going to get a lot of false entries. You're going to get a lot of Heikin Ashis showing you that it's changing direction and actually it's not doing anything for the rest of the day. So you definitely don't want to just keep going in case it's one of those days, because that's just a great way to blow an account. And remember never to trade this live straight away. So if this is a strategy that you like the look of and you want to have a go at practicing it, make sure you do practice on a demo account or a trading simulator first. If you need guidance on which demo accounts to use or which trading simulators to use, then I usually put some recommendations in the comments below. But it's really important to practice, because you're never going to get any strategy right immediately after you first hear it. You'll always need to put in some practice hours first. So I hope you found this video helpful. If you did, make sure you give it a little thumbs up. And if you're looking for more content like this, make sure to subscribe to Trading Angel now as well.